You're watching Beyond Markets. Welcome, where we bring you up to speed on development outcomes on the continent. I'm Kenneth, and thank you so much for being a part of the show today. Coming up on the show, we'll look at the impact of the COVID-19 pandemic across Sub-Saharan Africa and find out, how the countries and economies are bracing up to the challenge. You can join the conversation on Twitter. Let us know what you think. The hashtag to you is Beyond Markets. You can also hit me up at Kenneth Igbomor. Now, the global chief economist of Renaissance Capital says sustained lockdowns do not seem viable in low-income countries where the COVID-19 virus is already well established. Charles Robertson joins me now on Beyond Markets as we explore the impact of the COVID-19 pandemic across economies in Sub-Saharan Africa. Thank you so much for joining me on the show today, Charles, and I'd like to get your assessment of how economies are bracing up to the COVID-19 shock.
I think there's one key advantage that a lot of countries have, which is the agricultural sector is still a big chunk of the economy, like 25% of GDP, and it shouldn't be that impacted, and that helped. But for those countries that are very dependent on oil exports, we've seen huge pressure on Nigeria, Angola, Gabon, and it's a real problem. And we're getting the worst of the commodity crash of 2015-16, plus the global financial crisis kind of recession impact of 2008 and 9, all at the same time. So it's a really tough year, at least, this year for Africa, sadly.
I'd like to understand some of the trends that you are seeing when you compare how this virus is spreading across Sub-Saharan Africa compared to the rest of the world.
I think one of the things which I think should get a lot more emphasis is the incredible success that some African countries have already had in fighting the virus. So Mauritius basically hasn't been a new case in Mauritius for about a week now. Rwanda hasn't had a new case for days now. These two countries are as successful as Hong Kong, better than New Zealand, better than Australia, and they're really not getting enough attention for the success that's been done. I think the governments there are highly capable and very effective top-down organizations which have made it work. Elsewhere, I think I've been impressed by how quick Nigeria and others were about checking borders, checking temperatures for airport arrivals. It happened to me in Abuja in mid-February. The UK's only just quarantining people now. It's taken 2.5 months for Europe to catch up with what Africa's done. So Africa, I think, was quite quick to act in the main, and quite lucky that the virus has come later and didn't get so strong, didn't take up as many numbers as we've seen elsewhere. But I still think the big challenge is going to be how can countries sustain a lockdown when households don't have the savings to buy them by, when governments can't afford to bail people out in the way that the US, UK, Germany and others have been able to do. So it's been a really good story, I think, in terms of keeping the coronavirus under control so far. I'm just not sure it's going to be sustainable in the same way. So then the question is, how bad could the impact be? And our base case is that for Africa, it will be much easier, hopefully much easier, because of the age, because of the demographic story we've been talking about since the 2nd of March.
All right, but when you look at the outcomes that we're getting from the measures that are put in place, it's one thing to have measures in place. It's another thing to have these measures bringing the desired outcomes that we want. When you look across the continent, Sub-Saharan Africa, you look at East Africa, you look at West Africa, you look at Southern Africa. How are they measuring up with regards outcomes?
The outcomes are, in terms of cases, it's been looking much better for East Africa. Even when they've been testing quite a lot, the percentage of positive test results has been very low. In Kenya, Uganda, Ethiopia, like 2%, 3% of tests. And I think that's quite a good gauge for how widespread a virus is. If you're testing 100 people or 1,000 people, but you're only getting 2 to 3% positives, it's telling you that the virus is not well established. We're seeing much higher numbers, though, in West Africa, Senegal, and Nigeria. One figure from a week or two ago was over 20% of tests in Nigeria were coming in positive, and that's telling you that there's an awful lot of cases around. Assuming those test results are all, good tests, and there's been some problems with tests. So it looks like it's a bigger issue in West Africa, less in East Africa. And Southern Africa seems to have acted quickly enough, at least in South Africa's case, and a few of the countries nearby. But so far, the numbers are also reasonably well under control. But we've also seen some rich countries. Sao Tome and Principe has got over 100 active cases now. It's the first country in Africa to get 100 active cases per 100,000 people. And it's going to take a little bit of effort to get that back down again, as Europe has done.
But you mentioned that one of the challenging areas to look at is how countries can sustain the lockdowns, And I would like to get your understanding on the easing of the lockdowns. Do you think some countries actually went about easing the lockdowns too soon, or do you think it's something that they did in the right time?
There seems to be a big difference now between what's happening in those countries which, like Rwanda or Mauritius, that acted quickly, got it under control and could stop the virus. And it doesn't look to me that they've eased their lockdown where they have done, absolutely fine. Ghana eased the lockdown at 3 cases per 100,000 people, 3 active cases. And a couple of days ago, we were over 15 active cases. So the number of active cases has shot up, and it's not just because of that guy in the fish market who managed to infect 500 people on his own. But I think Ghana's goal was to get the virus under control enough that the health system could cope with the numbers of people coming into hospital. So their goal was not to stamp out the virus, which I think Rwanda and Mauritius will have succeeded in doing. It's just to manage the numbers so that people can carry on working, the economy can still function, the government's got money to spend on health and education as a result, and their goal is just not to stamp the virus out, but just to manage it. Denmark's going for the same policy in Scandinavia, and Sweden, of course, hasn't done lockdown at all, nor has Belarus, nor has Brazil. So a number of countries are saying, we can't stop the virus. But the question is, are they right? And we don't know that yet. But I have sympathy for those governments like Ghana that's saying we can't afford to try and stamp out the virus. Yes, Rwanda's done it well. We can't do this in Ghana, but we will try and minimize the overload on the health system by keeping it in check. So it depends. You're easing it too early if you are getting a lot of percentage cases and you're trying to stamp it out. But if you're trying to just manage the process, then I think most countries in Sub-Sahara don't need to have a strong lockdown if they're just trying to manage the process.
All right, then, managing the process, you say, but I'd like to still looking at the processes on the testing capacity we're looking at across board in Sub-Saharan Africa. What countries are standing out. We understand South Africa is doing an amazing job. Some other countries are also doing the same. But a country like Nigeria is just doing just about over 30,000 tests so far.
Yeah, that's been a real problem, and Nigeria is not alone on that. The UK had exactly the same issue. The UK has had a real problem getting its number of cases down until about a week or so ago, because I think there was way more cases in the UK than was recognised, because there just wasn't the testing. Nigeria, 30,000 tests is just way too low, and I suspect that the reason there's such a high positive ratio is because the virus is now very widespread. And I think what I'm using as my comparison point is India, Pakistan, Bangladesh. Now, they've had lockdowns now since the middle of March. It's not succeeded in stopping the virus spread. India had record cases this morning, and they've been in lockdown now since the middle of March, and a really painful lockdown. It's got to be really hurting that economy. And I'm not sure it's working for them. Pakistan did try that and has actually eased up on the lockdown now, and said, okay, we've got a young enough population. We should be relatively unaffected, less affected than Europeans or Americans, certainly. And we need to get our economy up and running. And I suspect that's going to be the solution that Nigeria needs to head towards. Not trying to stamp out the virus, because it looks like it's probably too widespread already.
All right, because I'm looking at your notes from earlier today, you say that no one thinks Nigeria's data is an accurate reflection of the number of cases in the country. You know, I kind of agree with you as well, because we think that there's quite a lot of delayed response, especially with the fact that we had very low testing at the early stage.
And there's also there was a guy tweeting from the Middle East correspondent of The Economist was tweeting yesterday that there was a flight back from Nigeria to Lebanon, and they tested the people on the flight, and 12% of them had the virus. That's a very high percentage. I think that's higher than the flights out of Wuhan in January back to Europe, which were also used as a guide for how widespread the virus was. I think it's when it's got to that level, getting it under control it's possible, but you have to do Chinese-style lockdown. And again, I come back to this point. Do people have the savings to make that possible?
All right, now I need you to hold that thought for a bit. There's Charles, and definitely we'll pick up our conversation after the break. We'll take a quick break now. When we return, definitely we'll continue our conversation with Charles Robertson, who is the Chief Global Economist at Renaissance Capital. Beyond Markets continues after the break. Welcome back to Beyond Markets. Just joining us, Charles Robertson, the Global Chief Economist of Renaissance Capital, is my guest today on Beyond Markets, and we've been assessing the impact of the COVID-19 pandemic across the Sub-Saharan Africa. Thank you so much again for joining me on the show as we continue our conversation. And Charles, before we left off, you were talking about the spread across the continent and testing capacity. But I'd like to get your thoughts on what we're seeing now, the trends that you're seeing with the spread, and looking at the dates from when the virus came into Africa. Africa recorded the first case on the 14th of February, and now this is 3 months on. But how does Africa compare with the rest of the world when you look at the first 3 months of the pandemic?
I think it was the first month was very easy. That January-February period, people weren't turning up from China. We looked at airline flight numbers, and there's huge numbers from China across to Europe. Many fewer to Africa, and I think that helped. So there's no surprise that it was Europeans who were bringing the virus in numbers through February, March. The big rise going on at the moment is Latin America and the Gulf. It seems to be these kind of tightly packed dormitories of migrant labor from South Asia, mostly Bangladesh and India, Pakistan, was really driving the cases in the Gulf. It's now beginning to really show up though in the data in terms of record high cases in a number of African countries. Pretty well every day there's a new country seeing record highs. So I think the numbers are picking up. We're not at levels for the larger countries yet, which are anything close to what we saw in Europe, but there's a whole host of small countries, small populations like Equatorial Guinea, Gabon, Guinea-Bissau, where the Prime Minister and his cabinet have got it, as well as Sao Tome and Principe, where the numbers have got quite high now. So finally, it's taken until May, but finally we're seeing the virus spread. And I think what's important about that for two reasons is that there was an argument a while ago that it wouldn't spread in hotter climates. That seems to be disproven now by what we've seen in Latin America and what we're seeing in these hotter, smaller countries in Africa. So it is spreading. But the death rates are really different. If you go to Europe, full of old people, like 7.5% of all Italians are over 80 years old. The death rate's been really high. In South Africa, where 0.7% of the population is over 80 years old, the death rate's been extremely low. It's a quarter of what we've seen in Italy. If you go back to counting cases at the same time, so South Africa's got roughly the cases that Italy had in the middle of March, but the death rate's a quarter of what Italy had in the middle of March. So it really does look like it's hitting Africa much less, just as it's hitting the Gulf countries much less for similar reasons.
So demographics explain a key role there.
Massive role. Demographics, and also there's some comorbidity factors. So this issue of diabetes, I haven't got data on that, but also obesity, which we have got data on. And one of the thinnest continents on planet Earth right now is Africa. Most of the people there, in many of the countries we look at, less than 10% obesity rates, along with Korea, Japan, and these countries are also recording very low rates of deaths per capita. So it looks like obesity will also be a positive for the lack of obesity will also be an advantage. So not too many old people, plus a population that doesn't have the same weight issues, I think are two helpful factors.
Let's look at the adjusting to the new normal and how African countries in Sub-Saharan Africa are faring. In regards to social distancing, we're talking about the new norms of working from home. We're talking about reduced working hours, and the impact you could see that play out on businesses. How do you see this impacting economies across Africa?
I think it's going to be a bit difficult to measure a chunk of it because a lot of economic output still is in the informal economy and doesn't get measured at the best of times, doesn't get taxed well or at all at the best of times. And it's much harder then to judge to what extent digital can even replace it, if it can at all. It's very hard to measure. What I think we're seeing in Europe and the States is a big hit to productivity. It's also hard to measure, even at the best of times, it's been very hard to judge just how helpful even computers have been. And economists have been struggling with that number for a very long time. So when we're using them less well, because we're not working in teams, established teams like we've been doing, it's hard to see that playing out as well. And what's complicated also about this virus is that so much of the hit has come into services. And services is another area where economists are not brilliant at measuring output. We find it much easier to measure how many cars a factory has produced than the value of a software that's done on a computer or economic research done by a bank like ours. Hard to measure just how valuable it is. And I know there's some critics out there who say it's not very valuable at all. But then trying to count the hits from that is really, really hard. Again, I'd come back to the point that I think because so much more of the population is dependent on agriculture, and that's a little bit easier to measure. Have you grown crops? How many crops? And you're going to carry on growing crops even if you've got the virus, or even if your family's got it. Someone will be out there collecting the harvest. That helps. We're obviously seeing a horrible hit to tourism. Countries like Mauritius, 7-8% of GDP dependent on tourism. That's going to be really painful. But then you've got a country like Nigeria, where Nigerians spend more abroad as tourists than people coming to Nigeria spend in Nigeria. So actually, you cut the flights, there's arguably a benefit to the balance of payments, a benefit to the Naira from that, the lack of flights and the lack of travel between Nigeria and the rest of the world. So it's a really mixed picture. What we're seeing is that investors are quite liking into Kenya, for example, in terms of equity markets, because they see it as benefiting from lower oil. They're finding Nigeria more of a challenge because of that oil hit. And then debt investors are worried about the whole debt restructuring talks that are being promoted by the UNECA in Addis, among others.
It's quite interesting. We've seen quite a number of countries go to the IMF, international lenders, to get these funds coming in. But then you look at how the countries are structured and how you look at the amount of revenue they're going to, revenue projections they are making for the year. Some realistic, some not so realistic. But I'm trying to get a whole wrap around, debt sustainability for Sub-Saharan Africa post COVID-19.
It's going to be what we're going to see is a worsening of the debt to GDP ratios. So let's take Angola, which is particularly exposed. Angola was supposed to have debt to GDP of about 100% of GDP this year. The IMF's latest forecasts last month, over 130% of GDP. That's a huge increase. And it's going to be tough for them to manage without support. Now, the IMF is on board and is being supported. The debt ratios are getting worse. Most countries are going to see a big export hit, one way or another, either directly through commodities, potentially through tourism, if it's Mauritius or Kenya or Morocco or Egypt. There might be less trade going through the Suez Canal, another negative for Egypt. So the whole story is looking more difficult. What we've been suggesting is that this is a public sector health crisis. And the best way to support countries in a public sector health crisis is through the public sector. You give from the public sector in the G7, for example, to developing market governments, and you give them the support they need to buy the tests, for example, that Nigeria needs in order to know how widespread the virus is, to compensate for people who have to work from home or are losing their jobs. That this support should be public sector to public sector. And that's what's happened in the West. The US and UK have been bailing out their people from the government to the people. What I think is difficult about what's happening in Sub-Sahara and a few others as well, Pakistan, a few others in South Asia, is that the private sector is also being expected to bail in, to take a haircut. They weren't expected to do this in the States or Europe. In fact, the private sector was bailed out in the States and Europe. When stock markets went down, the Fed, the Bank of England, and so on were cutting rates, were buying bonds, were injecting money into the economy to lift markets, to support the private sector, while the public sector paid for the costs. And the reason they've done that is because they expect the private sector to help drive economic recovery. And what's concerning to me about the proposals to penalize the private sector in Africa is that that will deter future investment and make it less likely that the private sector will support the recovery over the next 1 to 2 years. So I'm worried about the thinking that is saying that the private sector should be penalized for having invested in Africa or having lent money in the first place. I think it's potentially a mistake, and a mistake that could hold back growth for many, many years to come in Sub-Sahara. So it's not something that I think is the best solution. The best solution here is cheap finance from the G7, not necessarily debt forgiveness. It's not, the level of debt's not necessarily the problem if the interest rate on the debt's low enough.
I was going to get to the level of support we're seeing from the international community to try to understand how that response, how they've stepped up to the plate, looking at global development finance institutions, looking at the G7, like you rightly mentioned, and then that call for debt relief as well that has come in on the continent. How much do you think is going to move the needle for Africa's response against COVID-19?
It's all helpful. Personally, anybody who wants to help anybody in greater need than themselves, I think it's a great thing. But what I think the G20 has done is they have taken the hammer they've got, which is debt relief, and said, where's the nail we're going to hit this with? What they don't have is the right tool. So the right tool here would be G7 support at extremely low interest rates. It's costing the G7 no money to borrow money at the moment. The US can go out and borrow at, what, 1%? Germany, negative interest rates. There is no cost for them to borrow. There'd be no cost for them to lend on to the countries that need it most. So that seems to me the right solution. But the US, it seems, has nixed that and said, no, we're not playing that game. We're not going to let the IMF build up special drawing rights. We're not going to lend our special drawing rights onto lower income countries. There's lots of things they could do. They're not doing that. So instead, the G20 said, what can we do? So they've looked back to what they've done before, which was obviously the HIPC program in the early 2000s, and said, oh, we'll use that tool. But that's not even necessarily the right tool. Angola's got a very high level of debt, but it had its first local case of the coronavirus on the 28th of April. They don't have a big virus problem, they've got a big debt problem. So this solution of debt relief isn't necessarily the right solution at all. It's certainly not necessarily going to the countries that need it most. Countries that have a health crisis need support the most, not countries with the most debt. It's not necessarily the same thing. But I think the G20 has been led down this route.
All right.
Can't find another solution.
All right, Charles, I guess it's quite a lot to look at and quite many angles to look at it from, but definitely it's a conversation that we're going to continue on this channel and on this show on Beyond Markets. Definitely thank you so much for your time. I've been speaking to Charles Robertson. He's the Global Chief Economist at Renaissance Capital. And that's it on Beyond Markets, and thank you so much for being a part of the show. Remember, you can watch the show at 5 p.m. West Africa time daily and have access to all episodes of Beyond Markets on our website. That's at cnbcafrica.com. From me, Kenneth Igbomor, have a wonderful day. You can also use the hashtag Beyond Markets and let us know what you think about what we discussed. Thank you so much for your time and have a wonderful day.